Yeah, it's almost that time. I think I'm sure guests will continue to come in as the webinar progresses. First of all, I'd just like to welcome everyone to this webinar on accelerating digital transformation and innovation in banking. My name is Jason Thomas. I'm the Director of Training Services for Pragmatic Skills Academy. We are based in South Africa. And yes, I'd like to welcome everyone to this webinar in association with Tanzania Institute of Bankers and our facilitator, Dr. Watson Munyanyi. Yeah, the webinar is really just for bankers in the and professionals in the financial services industry who are really looking to improve or accelerate digital transformation strategies within banking. Yeah, we have Tanzania Institute of Bankers Executive Director on board, as well as Dr. Watson. Watson, if you could just maybe just move the next slide. I just want to give an introduction to the actual format of today's webinar. So we're just going to be going through a few key areas that we feel is relevant to the fourth industrial revolution. So we were looking at the fundamentals of the fourth industrial revolution, also talking about Industry 4.0 and Banking 4.0, how disruptive innovations are reshaping the financial services industry. We were talking about robotics and banking, virtual reality and augmented reality, artificial intelligence and blockchain, and the new crypto banking system. So that's really the format of today's webinar, where Dr. Watson Munyanyi will take us through that. Yeah, there's a chat available. I want to encourage everyone to post any questions that you have regarding the topic, but in the chat, along with your name and your company, and we will try to address all of these questions come to the end of the webinar. So we'll have a Q&A session. I see somebody's hand is raised. I'm not sure if you could maybe just post your question, if you have a question, in the chat, and then I'll see if I can answer it in the chat, or we can just put it aside and answer it at the end of the webinar. But without further ado, I'd just like to then welcome everyone to this webinar, and then I'll hand you over firstly to Patrick Mutusa from Tanzania Institute of Bankers, and then we will lead into the webinar.
Thank you very much, Jason. Hello, everyone. Welcome to this webinar on accelerating digital and artificial intelligence in banking. Essentially, we've prepared this for you as a demonstration of what to expect from the more detailed course that we've arranged in partnership with the Pragmatic Skills Academy. We've had the privilege of getting a presentation for this webinar from Dr. Watson Munyanyi, who is going to be the same facilitator for the more detailed course that we hope to get most of you attending today's webinar booked on. So we hope that we can raise some questions, perhaps raise some discussion points from you. TIOB is an institute of bankers, which is globally recognized through partnerships internationally and locally as well. We've been in operation for the better part of 26 years. During that time, we've developed relationships across Africa with institutes in Zimbabwe, Zambia, Nigeria, Ghana, all the way down to South Africa. And we are 13 network of 13 institutes of bankers which work together for the improvement of banking and professional financial services skills in the industry across Africa. Our partnership with the Pragmatic Skills Academy essentially is a partnership that will help both organizations to benchmark, or to rather leverage off the partnership in order to provide quality content to their audiences. In this instance, we are collaborating to ensure that we are bringing the best to the Tanzanian market, and at the same time learning from each other, working toward a point where we can co-create content for the better part of uplifting industry, the financial services sector, specifically the banking, and its journey towards a future where banking is more digital, products are more prevalent and diversified, and skills become more and more important. With that being said, I wouldn't like to add any more, but to hand back to Jason to continue to coordinate the session. Thank you so much, Jason.
Thank you, Patrick. Wonderful. Yeah. I think is that obviously the partnership is really to improve the level of knowledge and skills within the financial services sector, as well as across all sectors, from a pragmatic skills point of view. So we obviously doing this webinar to introduce you to some of the other programs that we have on offer, in specifically for the banking industry. So yeah, without further ado, I want to hand over to Dr. Watson Munyanyi, who's our facilitator for this webinar, and he'll take us through all the relevant content. Here we go. Thanks, Watson.
All right. Thank you very much, Jason, for the introduction. Thank you very much, Tanzania Institute of Bankers, for the opportunity to actually collaborate on this very important presentation on the implications of 4IR to the banking industry. We have had 4IR as the buzzword these days, where every industry is basically racing to keep pace with this revolution. And we thought it's important, it's necessary for us as bankers to actually help each other identify the opportunities that lie ahead in terms of the fourth industrial revolution and how it can help us understand some of the issues around the fourth industrial revolution. The outline has already been given unto us by Jason. This is basically the issue that we will touch on. But when you look at the fourth industrial revolution, you may realize that it's probably a wide area that we may not possibly cover in one webinar, but we will try and highlight some of the critical issues that are pertinent to the banking sector, that are pertinent to the acceleration of digitization in the banking sector using the technologies that are available with the advent of the fourth industrial revolution. But maybe some may want to look at it from this dimension. What is the fourth industrial revolution? Industrial revolutions have always been among us since the 18th century. Those that did history talk of the industrial revolution in Britain, which was basically a transformation from an agrarian kind of economy or a handcraft kind of an economy into an industry, a fully commercialized industry where there is machine manufacturing. That was when we started hearing about the industrial revolution. And over the past 3 centuries, we have seen a wave of these revolutions that are coming in to transform the way economies and societies interact. For instance, just to do a rundown, we have seen the first industrial revolution, which was between the 18th and the 19th century. And it was basically characterized by general commercial manufacturing and the development and the eruption of factories and steam power. That's when we started to talk about the industrial revolution, when steam was introduced as a source of power. And it was amazing. We saw a lot of innovative ideas coming up around steam power. And we thought we had arrived. Everyone thought they had arrived by then, until 1870 to 1914, when shortly after that first industrial revolution, we saw a boom in terms of manufacturing technologies that were anchored on electricity as a source of power. Steam power, yes, it continued to be in use, but electricity came into power several devices and it magnified the manufacturing process. And when you look at the first and the second industrial revolution, it was there were general revolutions that were triggered from a manufacturing point of view. They were triggered from the producer's point of view. So most of the business models that we saw around the first and the second industrial revolution were producer-driven business models, because they held the means of production, they held the power and the know-how as to the implementation of the sources of power and the manufacturing system, until we got to the third industrial revolution. Now, when we came to the third industrial revolution, manufacturing went digital. That's when we started to see evidence of digitalization in the manufacturing process. And there was a convergence of a number of manufacturing technologies. And the advent of intelligent softwares, new materials, elements of robotics were beginning to come in the third industrial revolution. And if we were to sum the third industrial revolution in a word, we'll talk of automation. We started to hear about automation. Banks started to introduce automated teller machines, a machine that you could actually access any time of the day, and you could do your basic banking transaction on the machine. And we also saw a boom in web-based services, even in the banking sector. That's when we started prioritizing web-based services as a way of reaching out to our customers. So that transformation also was evident in the banking sector as well as in other sectors as part of that revolution. So we saw an increase in processes that were generally automated, processes that we could say were automated in nature, until we had a boom in this current revolution that we call the fourth industrial revolution. When the third industrial revolution came, it came to create the foundation for the fourth industrial revolution. So our focus for today is on the fourth industrial revolution that the world is currently experiencing. We want to see how the revolution has transformed the manner in which individuals, customers, businesses, and society interact, and how the banking sector can actually take advantage of those new inventions to remain competitive, to remain relevant, and to remain profitable. So our thrust for today is on the fourth industrial revolution. The world is going through a new revolution called the fourth industrial revolution. Others call it Industry 4.0, others call it 4IR. This is the thrust of our discussion today. When you talk of the fourth industrial revolution, generally, I know there is a lot of talk about what it is about, what changes it likely to bring. But when you sum all those, you realize that the fourth industrial revolution thrives to bring forth alterations in the manner in which businesses, in the manner in which individuals, in the manner in which society makes use of information and executes information around the globe. Prior to the fourth industrial revolution, we used to talk about multinational corporations. But with the manner in which information is now being handled, we have transformed from multinational corporations to global corporations. Corporations that have got presence in countries that they do not have physical infrastructure. And if we were to do a 20-year challenge, for example, to say, okay, 20, 30 years ago, which were your top 5, top 10 companies in the world, you will talk of the companies that were involved in manufacturing physical goods. You will talk of your Total, you will talk of your Mobil, your General Electric, your Procter & Gamble, your AT&T, people, organizations that were physical in nature. But come up to today, the companies that are making waves in the top 10, top 20, you talk of your Google, you talk of your Facebook, you talk of your Amazon, you talk of your Airbnb. Airbnb doesn't own a single hotel, but it makes profit margins far, far bigger than those that have hotels globally. And this is the kind of revolution that we are experiencing. And us as bankers, if we do not admit to the fact that this is where the world is going, we find ourselves being pulled out of the market. So when you talk of the fourth industrial revolution, we are talking of a systematic and gigantic application of new technologies, big data, new algorithms, blockchain technology, cloud computing, and a number of these emerging technologies into new products and services, as well as interactions that are meant to bring about a huge impact in terms of customer experience. And that is the revolution that is among us. By nature, revolutions are disruptive. I think we can agree on that. Be it a political revolution, an economic revolution, by nature, revolutions are disruptive. That is not disputable. But there is something unique about the fourth industrial revolution. When you look at it, it holds the power to create an entirely new industry, entirely new sectors, while totally destroying those that are currently existing. The other three revolutions that we saw gave an opportunity to prior industries to continue to thrive in the onset of the other. But if we are not careful with the fourth industrial revolution, we may find ourselves irrelevant because of the nature of the revolution and the manner in which it is being transmitted. Look at us now. We are talking, some are from Namibia, some are from Tanzania, some are from South Africa, some are from Kenya, Zimbabwe. We are talking over technology, something that was not heard of in those times. So if we fail to have that relevance in the fourth industrial revolution, we may find ourselves being part of the statistics of companies that went the dinosaur way and that went obsolete. So revolutions, yes, they are disruptive by nature, but there's something unique about the fourth industrial revolution in that the disruptive power is intensified compared to other revolutions. I'll just do a run through and we'll open up for questions and discussion so that we can capitalize on the connectivity that we currently have. So when you want to characterize the fourth industrial revolution, you cannot characterize the fourth industrial revolution without mentioning the speed at which technological breakthroughs are happening. Unlike any other revolution that has occurred, the speed of current technological breakthrough has no historic precedent. It has never happened before. One moment they are talking about a piece of technology, the next moment another one is coming, it has overtaken you. Think of basic things like a product innovation. For example, you buy your expensive phone, you think you are the man in charge in town. The next morning, that company has introduced a new phone and yours, it has been relegated to the doldrums. That's the speed at which technological innovations are appearing in the fourth industrial revolution. You look at universality of the fourth industrial revolution. With the other three revolutions, you really need them to be well capitalized to take advantage of these technologies. But with the fourth industrial revolution, the radical changes that are being experienced, you've got the capacity to impact on every industry, to impact on every country, every individual, and every member of the society. There are certain pieces of technology that those that are considered to be low income can equally access together with those that are of high income, which is something that was not possible in the previous revolutions. Think of electricity, for example. It was a privy of the few who could have access to electricity. So once you fail to have access to electricity, you cannot participate in that revolution because you are incapacitated. But with the fourth industrial revolution, there is an element of universality in the revolution, which is good news for us as bankers. We are not restricted in terms of our capacity to undertake or to partake in this revolution. Then number three, and most important, is the fourth industrial revolution has had significant customer buy-in. I wish we had marketers around us. They would explain to us the fact that in the current revolution, customers are directly participating in product development, in service orientation, service development. There is a direct participation of customers in those processes. If an organization ignores the significance of the customer in product development, they find themselves irrelevant and less competitive. So, unlike the first industrial revolution, which was producer-driven, and the second, the fourth industrial revolution is an integrated model where there is also the role of the customer in the product development. I hope you are following the logic. So when we think of accelerating digitization in the banking sector, we must not fall into the temptation of ignoring the role of the customer in the product development process, because this is what is characteristic of the fourth industrial revolution. And we need to take cognizance of that significance if we are to survive the wave of the fourth industrial revolution. And having said that, we can observe maybe 3 or 4 or more key drivers of the revolution, things that us as banks cannot ignore in the fourth industrial revolution. Number one, cyber-physical systems. The revolution brought about the blurring of lines between the human, the digital, and the physical world. You cannot tell the difference between yourself and your cell phone, because your cell phone knows the number of steps that you have walked in a day. It can pinpoint the location where you are. It can actually tell you your heart, the number of calories that you have burnt in a day. So there is a significant blurring of lines between the human, the digital, and the physical world. I've always argued with my friends to say, you cannot continue to use that old phone, arguing that it keeps battery. There are people who are still holding on to their old phones, primarily because the phone keeps battery longer. A phone is not meant to keep battery. If you want to keep battery longer, buy a power bank and you connect it to your computer. Adopt technologies that are coming through, because this is where the world is going. So the question that you need to ask yourself as a bank is, how are we faring in terms of investment in cyber physical systems? What kind of technology are we using in the banking world, or in our back office, or in our treasury department, in the money market, what kind of technology are we using? And how does it fare in terms of blurring the lines between the biological, the human, the biological, the physical, and the digital world? Then we have also seen a growth in the number of smart devices and wearables. The level of growth in these smart devices is alarming. And if as a bank, we fail to incorporate these in our systems, then we may have a problem. I'm looking at a situation where an insurance company will insist on their customers to have a wearable that will detect their daily activity in terms of their physical activity, so as to gauge the level of health activities that they undertake before they insure. Probably they say we need at least 48 hours information from your wearable. This is where the revolution is taking us. And the question that we need to ask ourselves is, what is the source of the data that we are using on a day-to-day basis? Can we not transfer from the old system of collecting data to make use of smart devices and wearables to be able to detect the credit worthiness of a customer? This is something that the fourth industrial revolution brought with us. Then, of course, we talk of the Internet of Things, the connectivity or the connection that exists between several devices that are involved, say, in a manufacturing process. And it culminates into what we eventually call the Internet of Things. These are parameters that one cannot ignore that have been brought about by the fourth industrial revolution. And us as banks, we need to see where we are in terms of catching up with these pieces of invention that are coming up together with the fourth industrial revolution. And if we want to talk of technologies, there are a number of them. We now talk of big data. 95% of the data that an IT specialist handles on a day-to-day basis was created within the past 2 years. There is a huge volume of data that is available on a day-to-day basis that the bank can actually use to enhance their operational activities. The volume, the velocity, the veracity of data has increased over the years with the advent of the fourth industrial revolution. And the question is, how do we use the data to accelerate the digital process? How can we increase the data so that it gives us the direction that we need to take in terms of our digital platform as a bank? You talk of blockchain technology. We have heard of Bitcoin and other cryptocurrencies coming up that are entirely based on this distributed ledger that is decentralized and that it can actually be verified by all the participants in that blockchain network. And we have seen the massive use of blockchain technology in enhancing supply chain resilience. We have seen massive use of blockchain technology in government, in public activities. We have seen massive use of blockchain technology in the financial services sector, in the health sector, in the security sector, and a number of other sectors. But the question that we need to ask ourselves is, what have we done to take advantage of the unique characteristics of blockchain technology? Then we talk of artificial intelligence, a simulation of human intelligence that allows machine to make decisions that a human being is capable of making. And that can be went hand in hand with robotics here and there. The use of robots in areas that human beings could have undertaken. I was amazed. When I saw one video of a hospital somewhere that created a robot that would disseminate a medication for COVID-19 patients. So to reduce the level of contact with frontline workers, they developed robots that are able to disseminate or to distribute medication, distribute food, inquire from the patient what their needs are. And ask ourselves, how can we as the banking sector take advantage of artificial intelligence to enhance customer experience as well as our competitiveness? We can also talk of virtual reality, augmented reality. I was talking to one architect who was explaining how the fourth industrial revolution has transformed the way they operate. They were saying, over the years, we used to draw house plans using rulers and pencils. And if you make a mistake or the customer is not yet, you have to restart the process. But now with virtual reality and augmented reality, they can actually simulate the house plan in a computer, then using wearables, the customer can actually go through the plan, actually get into the house, a virtually created house, see the compartments, see the divisions, and appreciate the beautiness of the house from that perspective. And that is where technology is taking us. And we cannot run away from that. And we cannot talk of Industry 4.0 without mentioning 3D printing and intelligent manufacturing. And I got emotional when I read an article about doctors who did a scan on a pregnant blind woman, and they wanted the woman to have a feel of the unborn baby. So they printed the ultrasound scan in 3D form, so she could actually use her hands to follow the physical features of the baby. And that was exciting. And this is the kind of direction that we need to take as bankers. How can we enhance customer experience using 3D printing and intelligent services production? In terms of adoption, while the financial services sector has done well to embrace the industrial revolution, we are still lagging because compared to other sectors, there has been significant adoption of 4IR technologies. Talk of your media, for example. And we've always seen this, that in the past, it used to be very difficult for individuals to start a television network, a television broadcast network, because it required a lot of infrastructure, a lot of money was required. But with the advent of technology, you can run a television network from your desk with your PC, a few cameras, and a few support individuals. You can run a television network and get paid for it, get income from it. That's how the revolution is changing the way we do things. So as the finance services sector, the reason why we are here is we want to come up with ways that will push the financial services sector up the ladder to catch up with other industries like the media and entertainment industry. But so far the performance hasn't been bad. But we still need to embrace or gear up the digitization process to make sure we catch up with the other industries. The reason being, the financial services sector, the banking sector, finds itself in the proverbial eye of the storm. It finds itself at the receiving end of the storm. The revolution that is being precipitated by the fourth industrial revolution is hitting the big banking sector where it hurts most if action is not taken immediately. The nature of work has changed. The structure of the banking sector itself is likely to change dramatically if action is not taken by traditional banks. New fintech entities are coming up and they are competing for a share that was largely dominated by the banking sector. We have seen players coming in that are not traditional banks, but that are performing tasks that were performed by banks, mobile money platforms. And also, just as an example, in retail payments, that was considered a staple for big banks. Big banks had the capacity to provide infrastructure that could be used in retail payments. But with the advent of technology, we have seen fintechs like PayPal, SnapScan, Zapper, and all other technologies that you can think of from your context, taking over the historic banking market. So it's no longer business as usual, because there are people out there who are eyeing traditional banking market. And we cannot afford to ignore the need to digitize as a way to remain competitive in the market, because non-banking institutions are coming in to perform banking activities. Then you also talk about the rise of neobanks in Africa. A staggering 57% of the entire African population do not have any kind of traditional bank account, what you would call financially excluded. And over and above the fact that 95 million of Africans do not have a bank account. There is insufficient public infrastructure in most of our economies. And in terms of alternatives, or in terms of the capacity of traditional banks to infiltrate these unbanked markets, it becomes difficult because there are no roads, the telephone networks are bad, Wi-Fi internet connectivity is poor, and a number of other challenges that traditional ways cannot take advantage of. But digital banks have come in to fill that void. You go to South Africa, you have a fully digitized bank called Time Bank, one of the few digitized banks in Africa that is tapping in these unbanked markets. You go to Nigeria, there is Eversend. You go to Nigeria, there's Pig West, sorry. You go to Uganda, there is Eversend. You go to Egypt, there is Second Ashley. These are digital banks, neobanks that are coming in to infiltrate markets that could be beneficial to traditional banks. So can we see why it is not possible to hold the business as usual mentality? It is not possible because others are coming up with new ideas and taking over the market. And if we are not careful, traditional banks will be relegated to the doldrums and they'll become irrelevant in the market. And while we are talking of the need to digitize, while we are talking about the need to digitize, we should also bear in mind the fact that banks have got generic problems that they are dealing with. You are still supposed to deal with interest rate volatility. You are still having to deal with non-performing loans. You still have to deal with low deposit uptake. You still have to deal with poor capitalization, over and above the need to think of innovative ways to go digital. And we are saying, how do we escape from this snare that we are presented with, where the temptation is to go digital, but we still have got a myriad of these challenges that we still have to deal with. I'm not sure that many of us are familiar with indigenous knowledge system in terms of hunting and gathering, where if you want to catch a wild animal, you put a snare, then in that snare you put something lucrative, something that the animal would eventually go for. Then when they eventually go for that, they are caught in the snare. This is where banks are at the moment. Digitization is an option, a very viable option, as presented by the fourth industrial revolution. But there is a snare called instant interest and volatility. There is a snare called non-performing loans, poor capitalization, low deposit uptake. How do we get out of this? The answer lies in the fourth industrial revolution. The answer lies in the fourth industrial revolution. All these pointers are telling us the fact that digital transformation is imminent. The agents of digital transformation in Africa amongst them is a matter that requires immediate attention. Adoption of the fourth industrial revolution can actually assist banks, even the small ones, to actually leapfrog some of the challenges that they are currently facing, including lack of infrastructure. When banks embrace artificial intelligence, when banks embrace data analytics, when banks embrace blockchain technology, they can actually leapfrog some of the challenges that they are currently facing to remain competitive and remain viable in a society characterized by Industry 4.0. Banks, because some of the banks are still entrenched in tradition, they will find themselves struggling to keep abreast with the rapid technological changes that are happening. I told you about my colleagues who are still using the old phone, the old small phones, because they keep battery long. But the phones were not created to keep battery. You need to keep pace with technology. Embrace new forms of technology as they are coming up to enhance your competitiveness in the market. Not stick with old technology because of advantages that will not benefit you in the long run. Having said that, we need to gear up for this technological invention. We need to gear up to embrace the transformation as it is happening, so that at the end of the day, we are at a position where we are competitive in terms of the presentation that we bring to the market. Just a simple comparison between a digital and a traditional bank, you find that a digital bank is generally more inclusive. It is possible for consumers from all walks of life to access services on a digital bank than they would on a traditional bank, making it more inclusive. And in terms of operational costs, it is even easier to manage in terms of operational costs compared to a traditional bank. So a traditional bank, highly exclusive and characterized by high operating costs. So what's stopping us to go digital when we have all these advantages? And we find that the COVID pandemic has come as a challenge as well as a push factor for banks. With the imposition of restrictions of movement and restrictions on physical contact, some banks that have ignored the digital transformation for years found themselves forced to try some of the digital services that they never thought they would embrace. So it came as a blessing, somehow, because it speeded the adoption process of the fourth industrial revolution. So those that are slow at embracing this technology will find themselves even more and more irrelevant, because the restrictions that come with COVID-19 make it impossible to ignore the imposition of the digital processes. And having said that, we can have an outlook of what is happening in Africa. 96 of African banks consider digitization as an important factor that would steer growth. You would want to be part of the 4% when 96 of the banks, according to the African Banker 2020, 96% of the banks embrace the digital transformation. 52% of the banks in Africa believe customer experience is a priority, and that can be obtained from digital transformation. And a whooping 68% have already made inroads to go to digitize as we leap into 2021 and 2022. So these are the statistics in relation to the record pace that we're experiencing among African banks. So it is up to us as a bank to look at our context and say, how best can we maneuver around the digital roadmap to ensure that we improve the customer experience through digitization? And having looked at these statistics, you find that there is more to Africa than you would find in other continents that banks can actually capitalize on. There is more that we can obtain from the digital process. The African market itself has been regarded as the most exciting in the world, the fastest growing, twice profitable compared to the global average, and a hotbed of innovation. When you go to other markets, most of the things have been exhausted, but Africa remains a hotbed of innovation, and we need to take advantage of that and embrace innovation. You cannot wait until your house burns down to buy insurance. You need to think of preparing for the first industrial revolution well before the dislocations have been experienced. I'm inspired by this quotation from Robert Shiller to say, you can't wait for a house to burn, then buy insurance. We cannot wait for the first industrial revolution to dislocate us, for us to start preparing for the first industrial revolution. The time is now to prepare for the revolution so that it benefits it benefits us. And we have got precedents that has already been set. Precedents has already been set on the possibility or the acceptability of innovations in Africa. We can build on the success story of M-Pesa in Kenya and other East African countries. We can build on the success of EcoCash in Zimbabwe in terms of how the market appreciates a revolutionary product that speaks to the needs of the market. When a revolutionary product speaks to the needs of the people, speaks to the need of the market, success is guaranteed. We have seen it in these kind of innovations that have been put across. So while every revolution brings in new forms, new norms, we need to be strategic in terms of the approach that we take in the fourth industrial revolution. Bankers need to make a deliberate effort to go strategic in terms of the digitization process, in terms of accelerating the digitization process for the benefit of the bank and for the benefit of the customer. I have tried to craft a 4-parameter framework, which I called the Banking 4.0 Snowball framework, that can actually assist us as bankers to accelerate the digitization process. I'll go through the step one by one, just to elaborate on these parameters. My understanding, having looked at a number of literature on digital banking, having looked at a number of case studies from the third revolution to the fourth revolution, these 4 parameters could actually accelerate or snowball the growth in digitization. Number 1, for digitization to be a success, for banking 4.0 to be a success, there is a need in our context to have what I called conceptual sanity. There is need for us to have some level of conceptual sanity. What do we mean by conceptual sanity? For one thing to happen, there has to be an antecedent. I can give a simple example to that. Say, you want your child to go to school and learn well and get good grades. What do? You must make sure you pay the fees. You must make sure they have transport to go to school. If there are textbooks that are required, you buy them. And if there are additional material that may be needed, you choose a good school, give them the right uniform, they feed them well. That is a conceptually sane kind of behavior. Because you are bringing in factors that will influence good performance. So I am saying to bankers, if we want banking 4.0 to snowball, there is need for conceptual sanity. There is need for an alignment of the mindset that the bankers have to the mindset that the policymakers have, to the mindset that the customers have, so that at the end of the day, we put together a foundation that allows for the acceleration of digitization among our banks. We cannot have policies that hinder digitization and expect banks to go digital. We cannot have banks that do not have the right personnel to drive digitization, even when the policies are right, expecting to go digital when they have not made significant investment in foundations that allowed for digitization. So I am saying digitization acceleration entirely depends on the conceptual sanity that exists in our context. Are we prepared to take upon digitization as bankers, as policymakers, as consumers, as wholesale bankers, as retail bankers, as microfinance institutions? Are we prepared to take up digitization? Once we have that practicality, you can call it conceptual practicality if you want. Once we have that practicality, we are geared for digitization. Number 2, I don't want to go beyond an hour in my presentation. Number 2, strategic alliance. Technological corporations that will allow for digitization. Network providers collaborating with banks to accelerate OIR progression. We have seen it in Zimbabwe. One of the major telecommunication providers in Africa he has 100% wholly owned bank in Zimbabwe. That on its own presents an opportunity for accelerating digitization because they have got technology on their side, they have connectivity on their sides, and they have got the legal mandate through the bank to go digital banking because they have a banking license within their holdings company. And these are the kind of strategic alliances that we should expect. And in other parts of Africa, we have seen networks like Orange, they have Orange Banking. That's a drive that is necessary to ensure digitization accelerates. Then number three, we need to embrace robotic automation as a key component of digitization. We need to have systems in place that will allow us to build, deploy, and manage systems that emulate human actions to allow the whole process to be digital. If you talk of banking 24/7, banking anyway, do we have the artificial intelligence in place to perform tasks when human beings have knocked off at 5 o'clock or at 3 o'clock? That's robotic automation, which is the center of what we are emphasizing today. Part of that is augmented by a reskilling revolution. This is not just ordinary reskilling, it's a reskilling revolution where we have a multi-stakeholder initiative to reskill our network providers, to reskill our front office, to reskill our bankers, to reskill our customers, to reskill transport operators, manufacturers, small and medium enterprises in terms of the presets of the fourth industrial revolution. That will snowball the progress that we make in terms of the industrial revolution. Having said that, we cannot ignore the significance of artificial intelligence in the whole play because artificial intelligence is regarded as the next battlefield that will shift the balance of power. Organizations that are able to embrace artificial intelligence will be able to successfully compete in the global market. Why do we say so? Because this is where customer service is. And we saw it in 2016. Barclays Africa introduced the first artificial intelligence-enabled chatbot that facilitates two-way communication with the customer in moments where traditional emails and text could not improve experience to that level. So we saw the advent of Bankbots as early as 2016, artificial intelligence and work. What are you doing in your bank in terms of artificial intelligence? Barclays did it. If Barclays did it, why not? Why can't you did it yourself? That was not all. We saw United Bank of Africa. I'm sure many East African countries, including Tanzania, you have heard of Leo, the virtual bank. United Bank of Africa launched this executive banking personality called Leo. In many countries, Cameroon, Zambia, Cote d'Ivoire, Senegal, Congo, Nigeria, Tanzania. And now people can bank 24/7, backed by artificial intelligence. You talk of Stewart Bank in Zimbabwe. They launched their artificial intelligence interactive chatbots that allow you to withdraw, send money, transfer money using a WhatsApp-enabled chatbot called BAT. These are initiatives that are meant to remain competitive in the banking sector. So we are seeing evidence of artificial intelligence in use in the banking sector. And the question that we just need to ask ourselves, how can we grow on this initiative to ensure that we remain relevant and competitive? And a report from East Africa says Equity Bank, Cooperative Bank of Kenya, and KCB have migrated almost 85% of their transactions from banking halls to the digital channels. And employees are just left to handle the complex task. And that is a drive in the positive direction that we should embrace as bankers as well. And we need to also look into it and see how we can use the framework that we spoke about to enhance the acceleration of the digital platform. And Juniper Research says by 2022, $8 billion would have been saved as a result of use of artificial intelligence enabled chatbots, compared to a mere 20 million that was saved in 2018. So by 2022, are you going to be part of the banks that will save up to 8 billion in total as a result of use of artificial intelligence enabled chatbots? I would want to talk more and more about these issues, but time is not on my side. But here is the issue about use of artificial intelligence. These initiatives improve customer experience and they simplify interactions between banks and customers. This is a factor that should motivate us to go digital. Once we improve customer experience, once we simplify customer experience, we are able to improve on our profitability, improve on our competitiveness, and that creates an environment where competitiveness is huge among us as bankers. I don't want to talk much about this, but here is a trick. I'm inviting us all. We have a program that is run by the Tanzanian Institute of Bankers. It's run on several days on artificial intelligence and banking. I'll be facilitating that. Others have already registered. I think the first session will run in a few weeks. On artificial intelligence and banking, I'll be facilitating that presentation. What do you expect in that module? We will familiarize each other on artificial intelligence and its application. We will visualize and interpret data using basic softwares. We will build predictive decision through predictive analytics and see how informed decisions can be made using those pieces of technology. Extract raw data and make sure we get knowledge from that data and learn more about these Bankbots and these chatbots and how they can be used to enhance understanding of the platforms that we will make use to enhance customer experience. More will be dealt in on this. This is an intensive course, an interactive course that can be done online. So you can take it from wherever you are and embrace it. It will help us understand more and accelerate more the digitization process. But before we part, we may also need to acknowledge the fact that African banks should advocate for a proactive approach in terms of digitization. Choice of measures that are aimed at ensuring that, number one, we have reliable and supportive infrastructure. Let's work with the government, work with non-governmental organizations, multilateral institutions to create reliable and supportive infrastructure. This is how we are going to accelerate digitization. We also need a robust regulatory and policy framework. Policy inconsistency has no room in digitization acceleration. We need to work with our government, the international and local level, to create a robust regulation that allows for digitization and acceleration. A collaborative environment where all stakeholders can leverage on each other's experience. This is not a moment for selfish kind of behaviors. We need a collaborative effort if digitization is going to be a success. Then we need also the right condition so that artificial intelligence can be developed in a socially responsible way. We cannot discount the importance of good corporate governance, ethics, responsible investment, and all these other socially responsible ways to deal with the whole process of digitization. I've tried to run through a number of issues in the shortest possible time that we have. I hope we managed to say something and I managed to provoke debate in all of us, and we can have something that we can share from our experiences from the different corners of Africa that we are coming from, and we can also deliberate on these issues and also benefit also from sharing those experiences. Having said that, I am handing over to Jason for the question and comments time. Jason, if you are around, can you lead us through the questions and and comments section.
Yes, thank you. Thank you so much, Watson. That was a really insightful webinar and presentation. Thank you so much. Yes, so I hope that was insightful for all the attendees, for all of you. I want to just open it up now for a bit of a Q&A session. Maybe there are some questions you'd like to pose to Dr. Watson Munyanyi, possibly also to Tanzania Institute of Bankers. So if you wish, if you want to ask a question, you can raise your hand or unmute yourself, or I will unmute you once you've raised your hand. And then we can go ahead with these questions. Just before I do that, I just want to let you know that the presentation will be shared. I will share it with all of you. We'll send it through to you guys via email. We'll send you a link as well as the slides. So we have a recording of the event. We'll share that all with you. So yeah, I'll open up to the floor. If there are any questions, please feel free to raise your hand or just ask the question. Okay, I don't see any hands. Are you sure there are no questions out there? No, nothing.
I see Lamek is unmuted. Maybe they want to say something.
Okay, sure. All right, go ahead, Lamek.
Thank you, Watson and Jason. Yeah, Watson, the presentation was so good, and thank you. It was insightful. Mine is just I was in need to say if we can get certificates for this, and just to know when can we have another session like this. It's actually, as I said, very insightful.
I think, Jason, you can attend to that, or maybe the institute can also answer on that.
Yeah, from my side, that won't be a problem. I can send out digital certificates for all the attendees and thanking you for your participation. That shouldn't be a problem. I can gladly send that out. And yeah, like I said, the presentation and the video links will be sent to all of you as well.
So just to add on that, Jason, in response to Lamek, he did mention that he would like to see more of this presentation. So Lamek, there is a full, more detailed course that we have made available. The brochure for the same and the registration link is available on the TIOB website. So please feel free to have a look and take some steps to book yourself or some colleagues as well and your team onto that course as well. So it'd be good to have more participants. We've already started getting some. Jason, back to you. I noticed someone has raised their hand. Dingy Masaka.
Yes.
Yeah, hi, Dr. Munyanyi. Thank you very much for such a wonderful presentation. My question is actually looking into the future, because now there's already talking about this fifth industrial revolution is already here, but already talking about sixth industrial revolution. What's your recommendations for banks to really position themselves so that when it arrives, they're already ready? I also like your model. It's already, it addresses the issue of mindset, which is, in my view, where banks are really lacking. And also the challenge that they do have with size, because now to be big and operate as a small, with a small business mentality is really hard. And yeah, I think it's something that's very interesting with your model. But my question is more on the fifth and the sixth industrial revolution. Thank you.
Thank you very much. The one thing that I've noticed about from the third to the fourth onto the fifth industrial revolution, the prerequisites are almost the same. So while the world is leaping towards the sixth industrial revolution and the fifth industrial revolution, I will encourage banks to focus on the prerequisites of the fourth industrial revolution. Make sure they have the prerequisites in terms of the mindset, in terms of the legislative framework that is open to these technological developments, and a continuous system of reskilling. Once we have those in place, it will be easier for us to integrate some of the issues that will arise as a result of the fifth industrial revolution, even when we have not yet achieved all the developments within the fourth industrial revolution. Because once we have the right mindset, the mindset will drive us through the changes that as they are happening. Once we have the legislative framework in place, once we speak with the same voice, the government and the other players, it will be easier for us to embrace the fifth industrial revolution as it comes. Whether it comes sooner or later, but when the mindset is in the right position, it is easier to integrate concepts from the fourth industrial revolution with the new emerging concepts that will come with the fifth industrial revolution. That would be my advice to a bank or to any other institution, the small players, to say, work on your mindset, work on the drivers of change, work on the drivers of digital transformation. Once the drivers are in place, it is easier to integrate the whole processes as they are changing. Change becomes an automatic kind of thing within your banking institution. That's how I would look at it.
All right, thank you.
Thanks, my brother. I also see there's Harriet who unmuted.
Where is that? Can you unmute him from your side then?
It's unmuted. I thought they wanted to say something. Harriet Mwang to something.
Harriet?
Oh, it's Harriet.
Harriet?
Yeah,
okay.
They are unmuted.
Yeah, I think there's no microphone there. There was a question for maybe for TRB. Any sessions on cash management forecasting from Nelly?
Hi, Nelly. So TIOB does have cash management courses. We have something called cash flow management and working capital management. So we've got something in that space. Reach out to us, and we can even arrange an in-house training session for you and your institution as well, if you have a bigger team of people who are interested in the same.
Okay, and then we have from.
Okay, thank you, Munyanyi.
We've got there.
Hello.
Okay,
that's perfect. Thank you.
All right, can you guys hear me? My internet is a bit unstable here. Just want to make sure you can hear me.
Yeah,
yes, we can hear you.
All right, perfect then. So thank you very much for a great presentation. My question really focuses on the framework that you just shared. I think in one of the steps there you mentioned conceptual sanity, whereby the banks and the policymakers have to sort of come to align in terms of their mindsets. But then I realize that there might be an issue in terms of the appetite or the pace here. Maybe the banks might want to move faster than these policymakers. Then what's the bank's position, or what should the banks do to just ensure that the policymakers are moving at the same pace as we are? Because we're driven by different things here. We want to make profit, we want to serve and everything, but then the policymakers are looking at completely different things, and that might slow them down and therefore slow us down. So what should we as banks do to make sure that policymakers are moving with the same pace?
Thank you very much for actually exemplifying what I meant by conceptual sanity. That's a typical example of conceptual insanity or conceptual impracticality, where the banks are already on the gear level number 5. They want to go, but the government is slagging. There are countries where blockchain, Bitcoin, and all the other cryptocurrencies are not acceptable, but the market has appetite for it. So I would consider 2 things. Number 1, is what we normally call your moral suasion that the central bank normally employs whenever they're coming up with a policy. We really need to persuade the government to see it from the perspective that we are seeing it, that we are seeing things, so that we can actually be on the same wavelength in terms of what needs to be done and when does it need to be done. So we can borrow from the central bank methodology of moral suasion, where we appeal to the moral conscience of the legislators to understand why it is important for these policies to be in place to enable the development of the banking digitization process. Number two, I would recommend a process of alternative mechanisms. We have seen legislations that would prohibit a bank from undertaking certain activities because they are not considered, they are considered non-core banking activities. But that does not stop a bank from creating an arm that has got the mandate to perform those tasks. In the same manner that a telecommunication network may not accept deposits or issue out loans through mobile money platforms. But when they develop a banking arm, they are able to offer that services powered by their telecommunication strength. So I'm saying the second alternative would be if the government is slow to act, we may need to think of alternative methodologies that we can use to still fast track the digitization process. I may not have an exact example as to how we can navigate the process, but there is always an alternative that would meet the current legislative framework that will allow people to be able to navigate the waters if the legislation is slow to react. Those could be the two alternatives that could actually work. But the first one is the one that actually would work faster, where we appeal to the moral conscience of the legislators to understand the economic, social, and political benefits of digitization within the banking sector. That would be my response.
Great. Thanks, Dr. Watson. Yeah, are there any other questions? I hope that answered your question, maybe.
Yeah, that answers it. Thank you very much, Joe.
Right. Great stuff. So if there are maybe other questions that would like to pose.
So, yeah, are we waiting for some more questions from the audience?
No, I look. I don't think I haven't seen any raised hands or any unmutes. We have a number of obviously people still logged on, but yeah. So from my side, just want to thank everybody for participating. I think yeah, it was from my side. It was very insightful. But I'll hand you over to Tanzania Institute of Banks, to Patrick. He can share his insight and opinions.
Thank you, Jason. So all in all, from us at the Institute, we very much have enjoyed this webinar and essentially enjoyed watching the interactions. I do wish we could see the results of the poll, Jason. I'm hoping that some of the participants got a chance to participate and to put in their opinions in that poll. Essentially, that's also a way of checking how many are still paying attention during the presentations. Given that you gave your time to us today, we appreciate your time. We do hope that we've left you with some food for thought and also a call to action. If you want to know more about artificial intelligence and also the topic that has been presented today, there is an in-depth program that Dr. Watson has prepared. And he can go into a deeper level of detail in the respective topics that he has taken us through today. This was just a taster. So do please talk to your internal organizations, invoke the necessary approvals that you need to get onto this course. We hope to get some bookings from you. as part of many other programs that we've been working on with Pragmatic Skills Academy. We are hoping to get to a point where we can create meaningful conversations around topics that are very much relevant in today's age. I think you may agree with me that this topic is important to talk about, especially given the rapid change that is affecting even our respective careers in the banking sector. Some of our roles are becoming obsolete, and we're probably trying to attend this to figure out whether we're still going to have a job next year. I would say go deeper, attend the training, and then, you know, in that process, you're also making career planning decisions. It's never too late, yeah, and one is never arrived. So my call to action is book yourself onto the course, share information about this course. We've already sent out the links to the brochure and the registrations. Do motivate those who are around you to register themselves onto the course. And I think knowledge, the best thing about knowledge is to be shared. So mine is to say thank you to Dr. Watson for his time. We do hope that this session will definitely create a larger context for conversation with a smaller group of participants to a training course, which can be more meaningful about sharing some of the, you know, the experiences in the Tanzanian markets. Yeah, so from me, it's thanks, and hope to talk to you soon, to all the participants.
Thank you very much.
Thank you, everyone.
Thank you.
Thank you very much.
Thank you.
Enjoy the remainder of your day. Thank you very much.
Thank you, guys. Cheers.
Cheers.
Yeah.
Bye-bye.
Thank you,
Thank you. It was a nice presentation.